Hello and welcome to a new episode of Cut the Money Gap. This is where Asil, Omar, and Brian get together to discuss a timely topic in the wealth creation process so we can empower our listeners for tools to help them navigate the volatility that's constantly surrounding us. And today's topic is particularly important because Brian is going to give us some really cool information that ground us in the reality of the data versus being stuck in the tornado of the economical news and headlines in the markets. So, Brian, I'm super excited to hear what you have prepared for us today, particularly because a lot of people have their money invested, and right now, no one knows what they should be doing with their money, at least from the people I speak with.
Yeah, and you put that's a great term to use, Asil, the tornado of negative information that's that we get bombarded with all the time. And I know on a previous episode, Omar was taking us through the real estate industry. And this is, I think, one of the challenges in the other types of investment industries and the other investment markets is there isn't that one person like a realtor or a broker that you can go to who's just dealing with raw data and can help you bring down to reality of what's going on in these investment markets, right? If you tune into the TV, even go and talk to your bank or your advisor, like the information is all over the map and it's often not rooted in data. So a lot of people are left with this, well, like, what do I do? How do I operate with what's going on? And I know for a lot of people I've been speaking to over the last 6 months and even longer, they've either been sitting on the sidelines trying to figure out what to do, or they're freaking out, about money that they may have invested or money that they want to invest or what's happening. Omar, I mean, I know you're more in real estate, but how does this affect you and what you do and the people you're talking to?
Yeah, Brian, that's bang on. Like a lot of people that had started working with us had started off with a specific intention in mind. They either wanted to buy their first home, or they wanted to buy a upgraded property, or they wanted to buy an investment property, and then they, due to the fact that they're listening to all this news and because of the hype and the uncertainty, they have decided to put things on hold until we sat down and we talked about the data, and we had to look at the facts, and some people felt like they could lead their way through another victory in the time where it was really difficult, and some people felt like they were going to play it safe and wait and watch, and both strategies are good. There is no one right way of doing things. It's just that it's real and people feel it.
Yeah, and so I entitled this episode "Should I Stay or Should I Go?" from a very old popular song that most of us are probably familiar with. So really, what the heck is going on in the markets these days, and how do we navigate the next few weeks and months? So, guys, we know that investing is challenging and overwhelming at the best of times, never mind in the middle of a global pandemic, chaotic election in the US, and throw in some murder hornets just because things weren't spicy enough already. The last thing any of us want to experience is losing money. So, maybe some of the listeners or people watching, or even you guys, did you hear back in the spring from your advisor or your bank after the markets had had a fairly major crash in March when COVID first started? As long as you don't sell, you haven't lost any money. Anybody hear that? I know definitely I heard that. I was, hearing that in the media. A lot of my clients were saying that, and they were asking me like, is this true? And technically, yes. If you haven't sold, then it's true. You haven't actually lost any money. The value of what you own has gone down, but you haven't lost any money if you haven't sold. But there's a flip side to this that doesn't get talked about so much. And after that, stocks did start to rebound and go back up again, especially in the summer. We saw that in real estate as well. And advisors were now saying to people, see, things are going back up. Everything's great. You've made all this money. Aren't you glad you didn't sell? But here's the thing that they don't talk about. If you don't sell after those gains have been made, then you haven't made any money either, right? Just like you haven't lost any money if you sell, you haven't made any money if you don't sell up at the top either. And so, whatever gains you may have seen in the last few months, technically those are at risk unless you sell and take that money out of the markets and into cash. it's all on paper or on a computer technically. And when it's up and when it's down, you're still at risk. So the big thing for me is about protection. And that's what I want to speak about a little bit today, and really just sort of talk about why. What is it about that that is of interest to me? So I want people to understand that right now, if you feel you're up in the market, your gains are not protected from what many are predicting could be more increased volatility. I mean, look what's going on in the, how long it took for the US election to get sorted out. We still don't know what the ramifications are going to be over the next few months. And a lot of people are talking about another potential crash or downturn in the market. It's one of those major issues that I have actually with investing in stocks and mutual funds is there is little to no protection available to the average investor. Okay, the average person doesn't even know how to protect their gains, and it's kind of complicated and it can get really expensive really quickly, the strategies that are available in the stock market for doing this. So that's the concern for me, is how do you protect these gains or protect yourself from additional losses. You have no choice to continue to ride out the volatility and hope that you are up in the long run. And tell that to the people who were hoping to retire in 2009, 2010, and then they wound up having to wait an extra 5 to 10 years after the major crash that we had back then, right? So as an investor, I don't enjoy volatility, nor do I base my investment decisions on trying to predict what is going to happen in the world. It's too stressful and, quite honestly, impossible. Even the fancy pants investment managers that get paid hundreds of thousands, even millions of dollars a year to manage wealthy people's money barely get it right most of the time. And you can do research on this and look on the internet. There's been this debate going on with these really high priced managers and guys like Warren Buffett who were just buying into the indexes. And in most cases, the index was beating out all this fancy management, especially if you started to stretch it over a period of time of 5 years, 6 years, that sort of thing. Okay. I know, Omar, you've referenced this in the past, that I think some of these people that are trying to predict the markets got their start in the weather industry, trying to predict what was going to happen temperature wise, right? So the issue at hand right now is that many experts are saying that the markets have been up because of government stimulus and deferred mortgages and these other programs that have been implemented over the last few months. We all know that this propping up of the markets is eventually going to have to end. And then we're going to need to face the music. There's going to be a lot of people out there that will have to face the music. The question is, will things get back to a more normal economic state first, or will the stimulus packages run out first and plunge a lot of countries around the world and their economies into recessions, which could lead to drops in the markets? And the truth is, nobody is able to answer this question. And anyone who pretends they do know, honestly, they don't. They're just trying to sell you something for their gain. And I would be very cautious about listening to those people. It's no wonder that the vast majority of people are confused, overwhelmed, and paralyzed about how to invest when your investment strategy is based on trying to predict what is going to happen next in a global economy that is so complicated that nobody can do it. Of course, we want to make money and not miss out on the next positive rally, but we also don't want to get swept away in the next crash and lose money either. That's why for me, whether it's in good times or in times of trouble, I use the same proven strategy for investing that isn't based on my guesses about the future or anybody else's. And for the record, I thought the real estate market was going to lose a lot of money this year. I was one of those people that said, oh yeah, it's got to go down. How can it possibly go up? And look how incredibly wrong I was. Thank goodness that I didn't change anything to do with my real estate investments because of some incorrect guess and emotions that I was experiencing in the spring. So the very first thing that I do when it comes to investing is I sit down and determine what my short, medium, and long-term goals are. I call those my 1, 5, and 10-year goals, just to sort of give it, a round number of what I'm sitting down and looking at. In sitting down and creating my 1, 5, and 10-year goals, these actually become the determining factors for my investment options. Okay, so doesn't that kind of make sense? Like, to be driven by what your goals are rather than what you're hearing in the media or somebody's telling you around the water cooler or something like that. Nobody has any idea what's going to happen in the US or how COVID is going to affect the economy in 2021. And while these things could have an impact on my investments and therefore my investment decisions, that's not my main focus, and it's not where I start looking. I don't even start considering these sort of day-to-day, week-to-week, month-to-month things until near the end of my investment evaluation process. I stick with the things that are in my control and sort of more of that longer-term view. In other words, I'm not obsessed with all the drama and negativity and contrasting guesses as to what's going to happen that we're getting bombarded with in the media. So after I go through those short, medium, and long-term goals for myself, the next questions that I ask is things that I learned from my mentors and then I further developed to work for me and my clients. And I call these the 3 Ps of protection. So in order of importance, that is protection of capital, protection of ROI or returns, and protection of exit strategy. Now, I'm going to talk about this really quickly. I might be able to dive into this in a future episode, but the one I want to focus on first of all is protection of capital. Like I said earlier, we all want to make sure we make money and not miss out on the next rally, but we also don't want to lose money if there's a potential crash. So for me, the most important thing that I start with is, can I protect my starting capital, the money that I'm going to be investing with? Are there things that I can set up to protect that so that no matter what happens in the marketplace, I'm decreasing my chances of losing money as much as humanly possible? Now, you'll notice I didn't say guarantee, okay? There's no guarantees in life other than death and taxes. However, there are things you can do to protect that capital. Now, it turns out there's things you can do to protect returns as well. So if you're being told that, yeah, you're going to make a range of 7 to 10% or 12 to 15%, you can actually protect some of those ranges and increase the chances of actually seeing those returns versus 3% and then minus 7% and then 11% and then minus 9. That kind of volatility is too stressful for an investor like me. I don't like it. I don't want to deal with it. And it makes it too impossible to predict what my returns are going to be and be able to live my lifestyle on a year-to-year basis. Okay. The last one is protection of exit strategy. Now, it's all well and good for you to put money into an investment, but if you don't understand how you're going to get that money back out again, and there's nothing you can do to protect your ability to get that money, well, you know, I find this with Canadians with RRSPs. Most of them understand how to contribute to their RRSPs, but have no idea what's going to happen one day when they have to take the money out. And I say have to, because when you reach a certain age, the government starts to require you to start receiving money, regardless of the rest of your financial situation. So protection of exit strategy is also super important. Can I get access to my money when I need it? And what are the conditions and the terms around that? So if an investment doesn't pass my 3 Ps, my questions, then I'm able to move on quickly and without a lot of time wasted or stress trying to guess what's going to happen next week in China or the US. I use this strategy for investing so that I don't have to become a daily stock watcher or stress out every time a negative news story comes out, which is about every 10 minutes these days. My money is invested using sound, proven investment principles in opportunities that pass the 3 levels of protection, and that allows me to feel so much more calm and sleep at night, regardless of what is going on today, this week, or next month. I feel confident that my investments are a good match for my 1, 5, and 10-year goals and offer me the protection from the up and downs of all this volatility. Okay, so then I'm not choosing to buy or sell based on a fear-inducing tweet by Donald Trump or because some CEO got caught doing something that they shouldn't be doing again, which again seems to happen on a weekly basis. I buy and sell based on my investment plan and if those choices are going to lead to me achieving my goals or not. As I said, I'm going to go through more details of this in a future episode and explain exactly what the 3 levels of protection are and how I utilize them. Right now, I do want to leave people with one more thing that they can start to practice immediately. But Omar and Asil, did you guys have a question or a comment about any of this?
Wow, Brian, I have something to say. I am listening to you, and I'm just wondering. The first thing that comes to my mind is, all these investors that I know, and wanting to live a nice lifestyle, the investor lifestyle. The lifestyle that everybody talks about. Oh, buy property and then live happy. But then they go through the anxiety of making the right decisions without having the right guidance of these are the things that you need to know before you make that purchase. You need to have your 3 P's protected. And then the anxiety that comes afterwards, where they're basically living the market on a daily basis with every up and every down. They go up and down with it, and they feel the same kind of anxiety. So wow, what an amazing lesson people need to learn. And I think that makes a game changer of a lifestyle for people who have the money, who've worked really hard and are ready to invest.
Oh, thanks, Omar. I appreciate that. And yeah, the clients that I have that have gone through this process that I use, when they're calling me, right, they've seen something negative. I mean, something, like COVID that none of us expected. But all I have to do is represence them back to this type of information and this process. And to a person, they at the end of the call, they're like, oh, I feel so much better now. Oh, I'm so relaxed now, right? Because they're not getting swept away in all this negativity and drama and what if, exactly like what Asil was talking about on her episode recently. Asil, what about you? What are your thoughts or questions around this?
I'm excited about the fact that you said there you're gonna dive deeper into more examples and more tools in future episodes, because I think you just start scratching the surface, and I'm sure a lot of the listeners have a lot more to ask and learn from you and your expertise. But I always go back to the baseline that there's no one size fit all, and every person has a very unique situation that requires the contribution of a professional to give you a personalized and customized financial plan and investment plan that works for you. But I love that you said that you have a plan and you work based on what that plan is versus being emotionally impulsive about reacting to the market and to the news. So that's my biggest takeaway, and I appreciate your contribution with us today, Brian. It was great.
Yeah, so the final thing I want to give people is something they can do in the meanwhile until we have some of those other episodes. And it's really simple. You, right now, with your partner, with your spouse, with your family members, with your investment partners, you can sit down and start to capture your 1, 5, and 10 year goals. Okay, you don't need anything from the media or from anybody else to do this. I mean, if you have an advisor you're working with, they can help you with this sort of thing as well. But that's something that you can start taking action on right now, and it's going to direct all your investment choices going on. And I want to clarify a little bit. For most people, that's like, oh, well, how much money do I want to have? What do I want my revenue to be? What do I want my net worth and my cash flow? And those are all great. You should absolutely include those in your goals. And I'm going to encourage you to think about some other things as well. Like, what kind of vacations do you want to be going on? What kind of day-to-day lifestyle? Don't be worried about the details, right? I know people are like, well, I don't know what I'm going to be doing in 10 years. Yeah, but you probably have a pretty good idea of what you would like it to look like in 10 years, right? So as an example, you can say something like, in 5 years from now, I want to be half my lifestyle paid from cash flow from my investments and half from the work that I'm doing, which is very satisfying and I really enjoy and feel like I'm making a difference with. I didn't have to say exactly what job or exactly what investments or even exactly what amount, but that's still a goal that I can be working towards, which is tangible and realizable. Or 10 years from now, I want to be driving my dream car. Okay. You don't know what that is, right? If you had asked me 10 years ago, my dream car was a Maserati. And then 5 years later, my dream car became a Tesla. And guess what? I am driving my Tesla now. Okay. But the point was to have that idea in my head of I want to be driving my dream car rather than exactly. If you know exactly, awesome, put it down. But if you're getting caught up in that, then just think about the lifestyle aspects that you want. What are you seeing? What are you hearing? What are you smelling? Right? I have somebody who's cooking delicious meals for me. I have a housekeeper, all these types of things that you don't have to get hung up on the details. So that's my takeaway for people that they can start working on right now is their 1, 5, and 10-year goals. Make them as specific as you can, but don't get too caught up in the details.
Amazing takeaway and great way to summarize and conclude, Brian. I hope this was helpful. And for those listening, we will have our contact information so you can reach out to us. And we look forward to adding more value to you in future episodes. Take care. All right. Let me see.